Good day. I'm here to speak about zinc. Not everyone's favorite metal. Um, Somewhat of an orphan Annie of the base metal space. But I think it's one of the most attractive metals around, and it's one of the ones that's been undervalued for the longest. And in some ways, the undervaluation, brutal as it has been, because it's squeezed out a lot of zinc wannabes out there over the years, has actually set the stage for zinc's recovery, because the last time that zinc really had a run was back in 2007, 2006, during the much vaunted commodity super cycle. Well, in my case, I would say it was the second commodity super cycle, but it created a lot of furor in the first decade of the century, and it drove the price of zinc to over $2 a pound, a level which it has not seen since that time. Of course, in 2008, there was the wrenching effect of the global financial crisis, which sent all the base metals and even the precious metals much lower, while the precious metals rebounded, and copper, had a brief day in the sun again after that crash. Most of the base metals have never been back to where they were in the pre-2008 period. And even now, with a rally in the second half of this year in most base metals, we have not seen them even vaguely near the levels that they were pre-2008. Many people are sort of rubbing their lucky rabbit's foot and hoping that they will test those levels again. In some cases, like nickel, those levels were crazy back in 2007, and it's unlikely that we'll see those. But for other metals like copper and zinc, it's not a difficult situation to see how long-term underinvestment, really since that price spike and collapse, has set the stage for an undersupplied market in zinc. Now, the prime use of zinc, it has many uses, but the prime use is in galvanization. So a lot of its usages are linked to the electrical goods, like refrigerators, washing machines, white goods essentially, but also with autos, construction, all the types of uses of steel where you galvanize the steel, galvanize iron, to protect the iron from rust and other elements. And so that's been the big usage. So it's linked to really sort of activities that are very linked directly to GDP. GDP goes up, people buy more white goods. GDP goes up, people buy more autos. Construction goes up. So but what we haven't seen is, zinc mines have been tended to be big, though they can be small, and it's been a real struggle with the prices being as low as they were, sometimes down to as low as 60 cents a pound since the high of $2 a pound back in 2007, with 60 cents a pound, 70 cents, zinc was just not profitable. Zinc has another interesting dynamic, which it is either a byproduct of silver mining, or silver is a byproduct of zinc mining. So that means that the water is somewhat muddied in many cases with zinc, because it means that the silver price can be good or high, and people will produce more from their mines, but they will also produce more zinc, even if there's not a great demand for zinc at that time. And really, while we've had a weakish silver price until the last year, silver really kept a lot of silver, zinc, lead mines going during the downtime, because lead was a metal that was even worse off than zinc in terms of demand, and still has a pretty poor outlook in my view. So these three metals lead, zinc, and silver, all linked together in many cases in the mines. And then if you have a zinc mine and you have silver as a byproduct, so that's where the zinc is the preponderant mineral in terms of value, the silver can keep a poor, high-cost zinc mine going, because even in a scenario of lower prices, even when you've got, if you've got a decent silver price. And really, we've only had a confluence in the second half of 2020 where silver's been good. You know, most silver bugs would look for $50 an ounce like they had earlier in the decade. But, you know, the levels that silver's been in recent times are good. And so we've also got zinc starting to fire up as well. So zinc spent a lot of time moving up glacially towards the $1 pound mark. And then it got through it this year. And then it spiked up. And now it's over $125 a pound, which is a good level, but not a great level. We'd far prefer to see zinc above 160. Above 160, people are really going to start to think about bringing on new mines and doing exploration. At 126, what we see is that people will reopen a mine that may have been shut. They will increase production at a mine that's existing, which may have been sort of like running, you know, at a low level of production, but they will ramp it up if they can. And interestingly, what we'll also see is tailings reprocessing. So if you look at the list of projects that are coming up, particularly in Australia in recent times, you'll see that many of them, if not most of them, in terms of volumes, are actually tailings reprocessing. And you think, why should that be particularly viable? And it is because when the zinc was 60 cents, as it was for over a decade, the mines were high graded. And when those mines shut during the last 5 years, it was not viable to go back and reprocess the tailings. But when the mines were high graded during the low price period, a lot of zinc was heading into the tailings because it wasn't viable to get out the lower grade zinc. Now it is viable to get back in there and reprocess the low grade zinc, mainly because you've got infrastructure still at the mines, you've got roads, you've got all those things. So it's not like a de novo zinc project. We still are not seeing significant de novo zinc projects. So Australia saw a lot of big zinc mines shut down, reach the end of their life and shut down. We saw quite a number of Irish zinc mines closed down. Ireland used to be a big source of zinc. And even some mines in the maritime provinces of Canada were shut down because they reached the end of their life as well. So we've had quite a deal of attrition in the zinc space of old, traditional, big zinc mines in the last 5 years. And that has set the stage for what we've got now, which is the price is starting to rise. China was eclipsed as a big exporter of zinc in the first decade of this century. That's one of the reasons why the price spiked as well during that time, because China had for decades been a net exporter of zinc. And as its industrial growth got up, it stopped exporting. And so that created an environment which was good for non-Chinese producers to bring mines on the street. But as we've had virtually no investment in exploration, we've hardly seen a decent listing of a zinc company for ages. There haven't been any new additions to the stock of projects. And we haven't seen any great increase in production or in development. So that has produced a scenario which is where we are now. So to look at some of the current production, we can see that, for instance, the largest producer at the moment is China still, but that's for, according to the USGS numbers for 2019, that was 4.3 million tons out of total global production of 13 million tons. So that's like a quarter. And then the next largest producer was Peru, Australia, and then the US. And interestingly, the US rarely figures in the top 4 of any mineral, and certainly not any big base metal. The US is a significant producer of zinc. And so the US, to some extent, is self-reliant in zinc. And so that's an interesting scenario. And in Australia, of course, those 2019 numbers actually see a decline in, a primary mine production. And what's happening, and some of those mines have closed. And now you've got projects like New Century and some others who are just reprocessing tailings. But reprocessing tailings is very dependent upon the price of zinc. It has to be over $1 a pound to even be viable, and really over 120. And we're there at the moment. If the price of zinc pull back a bit, those tailings reprocessing operations would not really be profitable. And so it's possible that they would shut down. Some other factors that we can think about here is the global demand. Now, and that is a difficult situation at the moment. Despite the fact that base metals soared in the second half of this year, and we're seeing, strong moves in many metals during 2020, that comes in a scenario of great economic questioning of where we go next. Because we have a weak global economy, dare I say it, a devastated global economy. It's really a type of economy that we haven't seen since first oil shock, the 70s, or even worse, the 1930s, where there was total vaporization of demand and mass shrinkage in the global market, global economy. And here we stand at the end of 2020, wondering, prices of the metals have gone up. We're not too sure why. Maybe a supply situation. Doesn't really look like a demand situation. So if the demand remains weak in 2020, are all metals going to maintain these pretty good prices that they've achieved in the last part of 2020? And I can't say that the outlook looks great. I'm not not too many people are talking about V-shaped rebounds. You get a bit of a rebound with vaccines or whatever, and the economy's starting. Some of the damage that's been done out there to economies has been, dare I say, permanent and brutal. And so we're still not sure where that's going to go. So, but zinc has an advantage in that the underinvestment for so long means that there's a situation where we're not going to be getting masses of extra supply coming on. Even if we come back to the issue of the byproducts, there are not a lot of silver mines in the pipeline, because silver's price has been depressed for a long time until really 2019. It started to perk up a bit in 2020. It's been great, but silver mines don't grow on trees, and silver zinc mines don't grow on trees. So while the perfect combo for a silver mine is to actually have both products, because both products are at reasonable prices now, there's no pipeline because they've been underinvested for so long. So we're in an interesting scenario now where the pipeline is running dry on the supply front. And even if demand is not great in 2020, in 2021, the question is, where are we going to get the new zinc? And the tailings are not a solution, because you can reprocess tailings, but you're all done in 2 or 3 years. They're not that big, the stocks of old tailings. And so we need to see new projects. Where the new project's going to be, there are some projects in Ireland, but they're all rather formative. It's a great province for zinc, but not many of them are advanced. We don't have many in Australia. We wouldn't be doing all this tailings reprocessing in Australia if we had a lot of projects coming down the track. South America is one of the best outlooks for zinc, with countries like Peru being classic zinc territory, and hopefully we'll be seeing some good additions to supply there. But at the same time, are the markets and markets just sort of starting to wake up to even metals like copper and zinc with their recovery, and people have been throwing money at them up until now, because these new projects need tens of millions, if not hundreds of millions, to get them going. And while the market in 2020 has been good for gold companies and investors have been throwing money at gold projects, they haven't been throwing into the base metals projects. And this recovery has really only happened in the last quarter of this year. So remains to be seen if the markets come to the party and start to provide higher stock prices in the base metal stocks so that they can do financings via rights issues and other placings. But also, that may not be enough. We need people to finance projects, and the project finance pipeline is also dependent upon the number of feasibility studies that these companies have done. And with no money around, and with really sort of lousy prices for a long time, many base metals companies don't have oven ready or oven fresh feasibility studies because they didn't have the money to spend on them. And what was the point? So now I expect that in 2021, we're going to be starting to see more PEAs, more feasibility studies, more redos of old PEAs and old feasibility studies to try and get some of these projects that have been sitting in the hopper for so long up to date and ready to be financed. So that's the outlook. I'm bullish on zinc, but then again, I always am. Thank you very much. And now we'll go over to see a company that's doing it in the zinc space. Thank you.